Hi there, welcome to Kneppy Invest and welcome to October 22nd, 2024. We have about 25 minutes left of trading on this red day, Tuesday. I just had to think about which day it was. A little bit surprising. In fact, when I woke up this morning, after playing Wardle, in fact, I did have 178 straight days of Wardle and I forgot Monday. It's really annoying when you have a streak of 178 days and you just forget one day. Streak broken, but that's okay. Anyway, so after I played Wardle, the first thing I had a look at was what happened on Wall Street. And the first thing that popped up was Nvidia was up 4.14%. So my first thought was pretty good day on Wall Street. And then I had a close look. No, not really. In fact, the Dow Jones Industrial was down about 0.8%. Well, NASDAQ was up a little bit, and that was helped by Nvidia, of course. And I just thought, yeah, the Australian market's not going to like that. Dow Jones Industrial was down a fair bit, and that has come to fruition. Now, in saying that, I didn't expect us to be down or the XJO to be down 1.56%. That is a little bit of a surprise. And this continues a run of really high volatile days. Up big, down big, up big, down big. In fact, after looking at Nvidia, Nvidia is at all-time high, by the way. It wasn't that long ago when you saw reports in newspapers and the media about Nvidia losing $1 billion in a day. That was back in August, the 5th of August. Now it's at all-time high. Anyway, the XJO, down 1.5%, is now down below the top of the trading range because of this bad day. In fact, it was consecutive up, down, up, down, up, down. Now we've had a down day, but this down day was worse than any of our good days we've had recently. Does not mean anything in the long term or even the medium term. Who knows? Maybe tomorrow we're going to have a really good day because Wall Street has a really good day and we just rebound because we're overreacting. I think that's a definite possibility. Anyway, the agenda for today's video, because we are at a busy time of year, towards the end of the quarterly reporting months, which is January, April, July, and October. It does become quite busy. So we start to see more and more companies releasing their Appendix 4Cs and 5Bs. Today is no different. In fact, one of the companies in my top 5 stocks released their Appendix 4C that surprised the market, not in a good way. And the share price last time I looked was down about 35%. Other interesting announcements being released today, including training updates and also AGM, which we do see training updates. So I have included those companies within the top 5 stocks of the day. In fact, 2 Appendix 4Cs, 1 negative one and 1 positive one. Okay, so we'll do that after I have a look at what's happened on the ASX today. The best and worst performing sectors, indices, and also companies. Might go through economic and ASX news just to see if I have missed anything. And that is what I'll do first of all. And then if I have any time, we'll have a look at some comments. So let's get stuck into it. We'll go to training economics just to see what's happened today. I don't think I have to refresh this because I did refresh it. I had to restart my computer, so it should have refreshed to the new page. I think, yep, that has. Global bond yields rise. This is a bit of a story out there. Bond yields are rising now, and they're rising quite quickly. I did see some stories in regards to American bonds. Where's the US 30? It just keeps on rising. It's gone from 3.9% to up to 4.5%. This is a really interesting story. I'm not sure exactly what it means. I've been thinking it's just that the bond market is expecting maybe inflation to be a little bit more sticky, or there won't be many more interest rates cuts because maybe of inflation being a little bit more sticky. But it's really interesting that, yeah, it's risen 0.6% in the past month and a bit. Anyway, so that's a bit of a story right now we're seeing. Global bond yields rise. Oil falls on bearish outlook. What else is here? Japanese shares track Wall Street lower, down 0.9%. So a little bit better than what we're doing. And just having a look at the commodities. Gold, silver, copper, another pretty good day. So hopefully gold stocks have had a good day today. Coal down, iron ore down. We already know that oil is down. And what else is up? TTF gas, natural gas, both up. Okay, so let's go to Capital Brief just to see if I've missed any stories today. And apparently WiseTech is up, shares gain. That is something I could do, actually. WiseTech, yeah, up 4.47%. Nice little rebound after yesterday. In fact, the share price low today was 101.35. So initially, when the market opened, the share price of WiseTech did fall. In fact, I looked at WiseTech and also MinRes just to see how they reacted today. WiseTech's rebound is a good sign. Mineral Resources share price went the other way. That's not a good sign. And that sort of makes sense. Sort of makes sense because I think the Mineral Resources CEO or Managing Director being a little bit naughty, I think that's a little bit more serious than inappropriate behavior from Richard White. And Capital Brief is mentioning that he settled or battle with someone else. And that's why the shares gain. Not sure why that is so. NRW Holdings rise. That's not a bad thing because I'm trading this company right now. Let's have a look. Oh, yeah, 0.4% up. I suppose compared to the rest of the market, this is a pretty good day. What else do we have here? Magellan shares drop as investors grill board on funds under management revenue. It does look like possibly funds under management will start to rise. Hotel property investments gains on a rejected takeover offer. I don't really care about that. Audinate shares materially undervalued from Morningstar. Okay, that's in regards to a negative trading update today from Audinate. Share price dropped or has dropped a fair bit. I'm a little bit surprised the share price has not dropped more than this, 6.4%. That can be a good sign. Share price is low at 7.98, by the way. I thought this was a more negative trading update than a 6.4% drop. And Audinate is in my top 5 stocks of the day. And REA Group shares rise on JP Morgan upgrade. That's a good day for, 0.11%. Again. And uranium stocks fall as DPLO flags dire global supply environment. What is dire? When you say dire global supply, that should, for me, that raises thoughts of there's not much supply of uranium left, which should be beneficial to uranium companies. So what are they talking about here? Trading update, DPLO flagged that uranium supply uncertainties escalated notably during the September quarter as Kazakhstan state uranium production company Kazatomprom announced substantial reductions in plant output. Then they later announced a significant increase in future delivery commitments. Okay. This will reduce availability of supply outside China and Russia, further exacerbating the dire uranium supply situation. The company noted that a surge in demand for nuclear power generation from aggressive hyperscalers for unprecedented data center growth is putting added pressure on fuel supply. I'm not sure why uranium will be down on this. I thought this would be positive for uranium. There is a dire situation when it comes to supply. Demand supply? I don't know. I don't understand that one. And just probably proves that I'm pretty stupid. Aluka Resources shares fall on disappointing quarter. That's not surprising. Had a quick look at their quarterly results. I was like, doesn't look that good. And Stanmore Resources shares gain on Q3 trading boosts. Okay. And Viva Energy shares fall on softer retail conditions. So there's quite a few news stories here from companies that did not make it in my top 5 stocks. In fact, I wrote down, because what I do every single day is in my notebook, I write down all the interesting announcements. And some days I might only have 5. Today I have 6, 12, 18, 22. So I had a choice of 22 interesting announcements. Now, some of the share price might not have moved all much, so that's why I would have discarded some of these companies. But anyway, I might just tell you which companies did not make my top 5 stocks before I talk about the top 5. Okay, so let's get to the ASX today because I've really talked my butt off so far. Okay, so already we know it's a pretty bad day. We don't have to talk about the bad day. I've noticed tech has had a little bit of a rally since midday. That's good. IT is the only sector up. I'm assuming that's because of WiseTech. Bad day yesterday, good day, relatively speaking today. And the rest of the sectors are down big. In fact, only 3 sectors are not down by more than 1%. IT, staples, and telecommunications. Real estate down 2.33%. Healthcare down 2.17%. Not sure what's happening there. And discretionary down 1.96%. And gold, even though Gold's had a good day. It's the indices is actually down. In fact, no, indices are up. If we expand the indices, will we have one indice up today? We do. IT sector, XIJ. I'm going to have a quick look at the XJO, no, the XTL, which, by the way, is the worst performing indice here, down 1.75%. Does this mean all the financials and all the mining companies have had a bad day today? So let's have a look. I'm assuming maybe, Goodman Group's probably had a bad day. I'm assuming 2 companies are up, 18 down. There we go. And the only 2 companies up are Real Estate Group, REA Group, and WiseTech. Of course, yeah. WiseTech and REA Group, and the worst performing companies. 4 companies down by more than 2%. CSL, Goodman Group, CSL Healthcare, Goodman Group, Real Estate, Macquarie Group, West Farmers, and there's CBA down 2%, NAB down almost 2%. So not a good day for banks today. And to be honest with you, not a good day for most companies. Okay, so let's get to the best and worst performing companies on the ASX today, just to see if there's any surprises here. I fully expect some companies in my top 5 stocks to be among this list. And at the top here, we have NanoView. I almost put NanoView into my top 5 stocks, and I'm sort of brewing that right now. And share price of NanoView up 41.67%. Pretty good turnover. They did release an announcement today, and I thought, the market is going to like this. So let's briefly discuss NanoView. Share price is only up 36.7% on CommSec. This was, I suppose, a good announcement. EMAS delivers peer-leading SOC standard of care benchmark results. Don't really have to open up this. This is a positive announcement. And the chart for NanoView is looking pretty impressive. This is the second really good day out of the last 5 or 6 for NanoView. And of course, TradingView is deciding not to work. There we go. The share price has increased from 2 cents up to 6.7 cents in the last 6 trading days, and the volume has just exploded. So right now, this has become a bit of a market darling on the ASX. How much further has the share price to go? Who knows? Don't know. This could be the peak in the share price, or maybe this is just the beginning. That's the question. Is this just the beginning? And I do have it in my high volume spec. Okay, back to the top performing companies. We have Midas Minerals up on fairly low turnover. MoneyMe. Now, I'm happy to see MoneyMe in the top 3 companies. This is another company that almost made it into my top 5 stocks, but I thought, being a little bit biased by including it, I didn't think the announcement was that good, was that bullish. It was just something to do with fun. I forget exactly what. MoneyMe executes debut 517.5 million order pay ABS deal. So it's not the sort of announcement that would trigger me to get really excited about a company. But I am trading this company, so I'm excited about this, up 27.27%. And I was a little bit, not nervous, but the share price had pulled back a little bit. And I think if they didn't release this announcement today, there's a possibility the share price might have got to about 10 cents again, which is an important level for this company. Now, we want to see, for those trading this, or even just holding it, we want to see the share price of MoneyMe get to 15 cents, which would be a long-term high. But still, it's moving in the right direction. I would have preferred to see higher volume coming in today. MoneyMe. What else is on this list? NUMI. I'm pretty sure NUMI, which used to be Freedom Foods or something. Did they release something today? Class action settlement. That was 6 days ago. No. Although the chart for NUMI has just taken off. So this could be a bit of a trade thing for day traders. It's just accelerated upwards. I would have zero interest in trading this right now. That sort of price action is a little bit too vertical for me. Put it that way, a little bit too vertical for me. In the last 4 trading days, share price has gone from 16 cents to 30 cents, so almost doubling in the last 4 or 5 trading days on no specific news. So not really interested in these sort of charts. And just below NUMI, we have Plenti Group. And Plenti Group, up 23.1%, did make it into my top 5 stocks of the day. So we can move on. And, VTI. Visioneering Technologies did release their Appendix 4C. Now, I wasn't that impressed by their Appendix 4C. I'm just going to have a quick look at their chart just to see if this could be versioning. No, I was going to say versioning. Is that the word I was looking for? It could be approaching a breakout. The answer to that is no, absolutely not. And that's about it. Okay, let's have a look at the best performing companies by market cap, just to see if there's any big companies here. Ioneer released their Appendix 5B. Praemium did release an update. And there it is, up 5.88%. We're in the closing auction right now. A bit of an update. I actually did not have a look at this. Apparently they made a mistake and they had to update it 2 hours later, but that's okay. A lot of times companies do that. When I did actually see they released their update, I had a look at the chart for Praemium and I did write Praemium down. So right next to all the companies that release announcements, I have a list of about here. I have a list of 10 companies that I want to follow a little bit more closely because I like the charts. And I actually did put Praemium down. And I just wanted to see how the market reacted to the announcement today, because I think this chart is starting to look really good. And today is sort of more confirmation that Praemium is looking good. This is definitely a bit of a turnaround. And definitely share price of Praemium is now in an uptrend. So I do like this chart. And when the overall market is down a lot and your share price is up 5.4%, that is a good day. So that's Praemium. And I could have bought at yesterday's close on open, I think. Yeah, yesterday's close was 59.5 cents and it opened at 59.5 cents. So this is an instance where, yeah, those who were quick to the party are benefiting, already up 5.88%. But that's okay. I don't mind being a little bit patient. What else? Aroa Biosurgey in my top 5 stocks of the day. So we can move on. Energy One, they did what happened at Energy One? Oh, AGM today. So apparently someone liked their AGM, the market liked the AGM, was not marked price sensitive. And this chart is also looking pretty good as well. This is a company I've owned in the past. Yeah, this chart is looking good. I just like to see a little bit higher volume, but that's okay. Energy One. Orthocell has been a bit of a market darling recently. Let's have a look at Orthocell. Quick look at the chart. Yep, still looking okay. Actually, okay is probably underselling it. There's Plenti Group, Money Me. What else do we have here? That's about it. Okay, so let's get to the worst performing companies today. The top losers, and Next Science, not surprised there. So Next Science is that company that did release that Appendix 4C, and I did read it and I went, "Oh, gee, this is going to be viewed quite negatively by the market." I did not expect 34.6% drop. So I'll talk about Next Science later in the video. And other than that, Avanti share price is pulling back because the share price ran up a fair bit last week, because they got a new CEO or something, and I think it was a little bit of overreaction from the market. Someone to do with Zips. I think it was Zips US CFO, and share price rallied 2 days and has dropped 2 days in a row. That is what can happen. And as we go down this, yeah, EZZ Life Sciences is another bad day there. I'm not sure what's happening there, but a little bit of volatility for that company. You can see in the last year, EZZ is up 414.93%. So I think that's a little bit of profit taking. People are seeing the share price drop and went, well, now's the time to take profits. Lock in the profits. And I think there's a chance the share price could bounce. Who knows when, but it could bounce. Could bounce tomorrow. And now let's have a look by market cap. Metcash down 7%. Not sure what's happening there. They might have gone ex-dividend. No, well, that's nothing, nowhere near ex-dividend. No ex-dividend, 16th of July. I don't remember the company releasing anything today. Let's have a look at the chart for Metcash. What's happening here? Is this just negative sentiment driving the share price down? Something must have happened here to drive the share price down like this. This is really negative. You don't usually see this sort of chart and this one-day candlestick on really big volume unless the company has there's some news flow out there. It could be just a negative report from a fundy or someone like that. Here we go. Motley Fool has written something about it. Let's see what Motley Fool says about Metcash. Oh, okay, there we go. A bearish broker note out of Goldman Sachs. The broker downgraded Metcash shares to a sell rating with a reduced price target of $3.10 from $3.80, and the share price, yeah, $3.34. Again, I don't know why people sell on the back of these broker reports. It's weird, but people do it. They do it, and I suppose maybe they do it because other people are doing it. So all it takes to drive the share price of this company down 7% is a negative report from a broker. That's just weird. And anything else here? Nothing. Or Impedimed, down 9.4%. They did release their Appendix 4C. I've been waiting for this company to hit an inflection point for 8 years. For 8 freaking years. Still haven't got there, Impedimed. I actually owned this company once upon a time, many, many years ago, when it went into the ASX 200 or ASX 300. And since then, they just haven't done anything. And if you have a look at the chart, no reason to get excited. And the other thing I'm upset about Impediment is they stole IPD Group's ticker code, IPG instead of IPD. And this is an ugly looking chart, mostly. There's period of times when the market gets excited for, I don't know why the market gets excited about this company, because it's just not doing anything when it comes to growth. Well, that's not true. They are growing very, very slowly, but they need to grow much, much quicker. The reason I say that, let's have a look at their Appendix 4C. And of course, this is going to take 5 years to open up. Thank you very much, ComSec, for your awesome systems. I could do this in Market Index, and it opens up in 1 split second in a Jiffy. And by the way, Jiffy is a legitimate timing. A Jiffy is the time light. The physics definition of Jiffy is a time light takes to travel over a electron or something. Jiffy definition. There's quite a few definitions of Jiffy, but how long light takes to travel a distance of 1 femtometer, which I believe is the length of a neutron, electron, or something ridiculous like that. Yeah. Anyway, that's the whole point of this. Anyway, Jiffy is a very, very short period of time. So when you say I'll be back in a Jiffy, you're lying. Anyway, Impedimed. Here we go. Receipts to customers, it's 2.7 million. About 8 years ago, they had receipts of like 1 million. So they're growing receipts in a quarter from 1 million to 2.7 million in 8 years. Now, the problem with Impedimed is they burn through a lot of cash. Not only that, staff costs are 4.9 million, almost 5 million, almost double the cash receipts. Not only that, administration and corporate costs, 2.2 million. So they burn through $4.8 million of cash just in 1 quarter. And how much cash do they have on hand? 18.6. So they have a few quarters left of cash. But until this company shows they can grow receipts and not grow spending, or cut back on spending and maintain the growth in receipts, I have no interest in Impedimed. And what else? That's about it. Or Mitchell Services, I will be looking at that company. It's in my top 5 stocks of the day. So let's talk about some of the companies that did not make it. And I'll just have a quick look just to see. We'll just go through each chart. A quick look at these charts. Good Drinks Australia released some sort of trading update. Share price actually up. There you go, share price up. Market liked it. I don't like the chart though. In fact, this is a pretty ugly chart. And even though the share price is up today, it doesn't change anything for me. Aluka, we already know this company did release something negative today. Not trading update, their results, quarterly results. Share price down 4.1%. I'll get rid of that. I was trading this for a very brief period of time, and that trade went totally against me. Yeah, you need a trading plan. When you make a trade, make sure you have an exit strategy, because I'd be kicking myself right now. In fact, one of the companies I'll be talking about, I also traded that company for a short period of time, and I had an exit ploy or exit strategy, got out, and I'm very happy about that. And you understand why I'm very happy. Anyway, so Luca, no reason to get excited. The only reason I got excited back here, I thought it was breaking out. I thought Tide is turning for Aluka, but no. What else? I've already talked about Praemium. VEA, which is Viva Energy, had a quarterly or monthly update. Share price down 6.14%. So this is a negative. In fact, this is negative for a few reasons. Share price have fallen through a support level. In fact, this is a negative one-day candlestick. So you can see a nice little rebound off that support level. The reason that support is because you can see some lows back in October last year, and that's when the share price went on a run. So people know, subconsciously or consciously, that when the share price of this company gets to about $2.70, that's a good time to buy, because last year it bounced off that level. And then it bounced, and it had a nice bounce in September, went from 270 back up to 305. So that's a nice 10% return. I suppose it's not that nice, but today it's broken down below that support level. Now, I'd probably like a little bit more confirmation to see if it maintains being below that. NanoView, actually, have I shown you? I've already talked about NanoView. ABT, or Advanced Brake Technology. They did a deal, some sort of contract, a deal. I thought the share price might have rallied a little bit more. ABT signs exclusive global distribution agreement. It's not the sort of announcement that would get me excited, but I thought maybe the market would get excited. And plus, the chart for all this company, this is a nice looking chart. Advanced Braking Technology. What does this company do? Look at the name, Advanced Braking Technology. It's in the name. Anyway. Let's go back to what other companies? LBT Innovations. I thought the share price might be up a lot. I was really wanting to put this company in. And the main reason is because this company sold one of their machines, their APAS machines or something like that. And not only did they sell one of those machines, they might have sold a few of these machines, it was who they sold it to. Bristol Myers Squibb purchased APAS Independence. I just saw the name Bristol Myers Squibb and I went, ooh, that's a pretty big company. For those who don't know who Bristol Myers Squibb is, they are a listed entity. I'm trying to remember what their T code is. And BMY. This company has a market cap of $105.7 billion. If this company was on the ASX, it'd be one of the biggest companies on our exchange. In fact, this chart is starting to look good. I haven't looked at this chart for a long, long time. And this chart is turning up. A nice looking chart. Maybe it's turning up because they bought LBT Innovations machine, APAS Independence machine. Anyway, I thought the market would like that. Share price has barely nudged. And not even 1.5 million shares. Yeah, not much change in volume. I'm a little bit surprised by that. Okay, so excluding LBT Innovations, probably a good thing. And the chart, it's going sideways, consolidating. I think this is prime for a breakout eventually. If they keep selling machines, if they release a really good quarterly report, maybe making some money, I can envisage this company breaking out. It has a market cap of 28 million, but yeah, they're selling machines to pretty big companies. So they are turning my head around at least. Maybe not the market's head just yet, but definitely my head. So that's LBT Innovations. Dropsuite released a quarterly report or something, and share price is up. This chart is also looking pretty good. Nice looking chart for Dropsuite. Not sure about the valuation, and even their update, I wasn't really sure because the operating cash flow hasn't really grown. The annual recurring revenue keeps on growing, but the cash flow, it's just remaining stuck at the same level. But the market likes this company. And PYC Therapeutics. The chart looks pretty good. Share price down a little bit, all over the place today, but they did release some sort of, I forget now, but it was some sort of interim update on progress in RP1 or RP11 repeat dose trials. TCL, Transurban. Apparently Transurban was on or featured on Four Corners and was not pleasant. Yes, and share price down a little bit. I did not watch that Four Corners. In fact, I'm just going to Google it just to see if there's any news flow. No, it wasn't. Yeah, it doesn't look like there was much news flow in regards to that story. And what else do we have? Beam Communications. So they're in a trading hold. They're in a trading hold, this company, because it doesn't seem like it's positive. Because, where is it? The unsuccessful outcome of the arbitration relating to the Zolio Inc. joint venture between the company and its joint venture partner. So straight away, that does not sound positive. The other thing is, if you're just trading this, why? Because the chart does not look good. Yep, chart's in a downtrend, so no interest for me. And Mithril also released something today. Let's see if the share price has rebounded. Not rebounded, but has maintained its rebound. And yeah, it's hasn't moved. Okay. Some of the companies that released Appendix 4C today that I have not mentioned include DEM. In fact, they're operating cash flow positive, and Graffiti or Gratifi, GTI. They are also, in fact, well, let's have a look at the chart of both of these companies. DEM chart, not looking to, like to see some volume coming in before I get a little bit excited, but the price action is okay. Just need a little bit more volume. And Gratifi, I have no interest in this because the share price is below 1 cent. So it's about 0.5, 0.6 cents. Yep, some big volume coming in the last few days, but again, share price is only 0.6 cents. And you can see share price has just gone up 1 pip, and that's an increase of 20%. Okay, so let's get to the top 5 stocks of the day. And coming in at number 5, we have Aroa Biosurgey. Share price up 11.5%. Now, on first look, I thought, whatever. So the company is not operating cash flow positive. Now, a nice increase in receipts up to almost $20 million. And I would think if you got receipts of $20 million, you should be at least thinking about becoming cash flow positive and profitable. But no, it seems like they're still burning through a lot of cash, particularly when it comes to staff. $12.2 million just in staff. And almost $5 million in advertising and marketing. But that staff cost is a little bit too rich for me. And they are operating cash flow negative in this quarter by 1.2 million. So I was going to just move on, think, whatever. Burning through cash a little bit. They still have $21.6 million of cash. They do have very small amount of debt. But it was in the commentary that I found a little bit of interest. So sometimes I do go through the commentary, sometimes I don't. And this could be a good example of why you should go through the commentary, because you don't get all the details just by looking at numbers. The numbers are in the past. The most important thing is the future. And they do say something really important here. So strong cash receipts for customers, a best quarter I think this company has received. I can actually verify that. This might take a little bit of time. Let's move on. So 35% increase cash receipts on previous corresponding period, 12% quarter-on-quarter increase. But here is what I like in the second bullet point, particularly the last sentence. So I won't even talk about the first sentence because they're talking about cash outflow. But the company expects to be operating cash flow positive in the second half of financial year 25. Now, how they achieve that is another question I might have. Do they achieve that by increasing cash receipts and maintaining a lid on their spending, or they're achieving that by decreasing their spending? So I definitely would prefer the first option, increasing the cash receipts at a greater rate than their spending, because that is telling me the company has hit a very important inflection point. They're seeing some operating leverage, some scale, and that's really important. Now, when a company decreases their costs, and that's how they become operating cash flow positive, that's not sustainable. So I definitely prefer the first instance. And if we go to ARX, and I do want to, where's the zoom? I can never find the zoom because I never have to zoom. Where is it? I found it yesterday, didn't I? Here it is. It's in the view section. So here it is. I've just highlight Aroa Biosurgey, their receipts history. So $4.5 million in the September quarter 2020. up to $19.9 million in the last quarter. So receipts are growing at a nice rate. Now, not every quarter we see growth. There's some quarters a little bit lower than the previous one, but receipts are growing. That's the first thing I look at when it comes to any of these companies. I want to see receipts growing. And the most important thing here is operating cash flow positive, expected operating cash flow positive in the second half. Now, whether there is to that remains to be seen. Now, the other thing to look at is if you have a look at the full year, this is the first 6 months, they were operating cash flow negative by $4.9 million. So there's a chance they're operating cash flow positive by $1, and they're still right. What they've said is not a lie. So keeping my eye on Aroa Biosurgey. Now, the most important thing is the chart here. If this was a breakout, I'd be really tempted to take a position in this company. I'm not there just yet. In fact, we have seen a little bit of selling coming in today. Share price reached a high of 60 cents, and it's now pulled back to 56 cents, 58 cents. And the whole reason why we have seen a little bit of pressure on the share price is because the share price is in a downtrend. So there are holders who think this company is a dog stock, and they're just waiting for the share price to bounce so they can sell out. So we're not quite in an uptrend, or this company is still not quite in an uptrend just yet, even though this is the first sign, I think, where I do see a light at the end of the tunnel for Aroa Biosurgey. So definitely keeping a closer eye on this company moving forward. And if I see the share price starting to move into an uptrend, I might take a position. In fact, I'm going to put it into my watch list. There we go. So that's Aroa Biosurgey coming in at number 5. Coming in number 4, we have Plenti. Share price up 23.1% on an update. Second quarter 2025 update, accelerating profitable growth. Now, this company did a deal with NAB quite a while ago. In fact, I'm going to have a look at the chart right now because I can tell you exactly when I did this deal with NAB. This deal was done with NAB was back in November of last year, so almost a year ago, 28th of November. I didn't realize it was that long ago. Share price on that day rose 64%. You can see the share price has been going sideways ever since, not ever since then, but just after that. You could probably say very slowly going up if you draw sort of a best trend there or trend line or whatever. And today, even though the share price is up, it's not quite a breakout, very close to a breakout, but not quite there because of the share price highs this company saw back in June, but very close to a breakout for Plenti. Now, that deal they did with NAB back in November last year put this company onto my radar. And I think there's a lot of companies in this space that I think are undervalued. We've already talked about one today, Money Me, and I am trading Money Me. So Plenti Group has a market cap of 117 million. There's heaps of companies in this space, by the way. So Resimac is another one. I just came to mind there. There's many that I won't name because my memory is terrible. But the main thing here is market cap 117 million. So this is a lender. Not sure what they lend to. If you have a look at the about section, fintech lender, they provide faster, fairer loans by leveraging our smart technology. So they loan, but I'm not sure who exactly they loan to. I'm assuming it's small loans, not mortgages, that sort of thing. Okay, so unaudited first half cash NPAT of 5.5 million, which means if you look at the market cap and that sort of NPAT, this company is not that expensive, representing an increase of 260% on previous corresponding period. Loan portfolio has increased by 2.28 billion. Loan originations of 323.3 million. That's all greater than the previous corresponding period. And everything you look at when you look at this particular announcement looks pretty good. Successful transition of Adam Bennett into CEO role. Here's the loan portfolio. Nice increase every single quarter. And automotive, there we go. Automotive, renewable energy, and personal. So definitely mortgages there. And in each of those 3 sectors, divisions, whatever I call it, it's a pretty nice growth, particularly in renewable energy, up 28%. Anyway, so the market likes it. I thought it was pretty good. I'm not surprised to see the share price up 23%. Not quite there when it comes to the breakout for Plenti Group. At this point in time, I do prefer Money Me's chart just slightly over this one, but it's still looking pretty good. Plenti coming in at number 4. Pretty good day for that company. Unfortunately, the last 3 companies in my top 5 stocks did not have a good day. And it starts with Mitchell Services. I think this company is cheap, but they always disappoint. when they release an investor update, and today is no difference. Share price down 9.44%. Not surprised at all. So again, this company is cheap, but just because it's cheap doesn't mean they're doing things right. Now, I think this could be an opportunity, and there's one reason I think this could be an opportunity. I think the market is reacting on this past quarter. So again, the quarter is in the past, but what we should be reacting is the future. So there are some promising things within this report. But when you look at this particular quarter compared to the previous corresponding period, it's bad. So it's not about average. So this is a drilling company. So they have rigs that drill. Average operating rigs, which is the thing this company reports on, down at 12.6%. Number of shifts down. Down. Average operating rigs down 17%. Number of shifts down 20%. Revenue down 19%. EBITDA down 39%. That's in dollars. EBITDA percentage down 26%. So that's margins. And earnings before tax down 93% from 4.8 million to 341,000. So we can definitely see why the market has reacted. That's pretty bad. They go through some reasons behind it. Go through a myriad of reasons, blaming rainfall events, general market conditions for general resources, mining industry, corporate activity, underground fire events, that sort of thing. Companies like this always have excuses when they don't perform. But in saying that, there was some positives. Mobilizations well underway in financial year 25 quarter one following multiple newly won contracts. So they didn't lose any contracts, but they won some contracts. In fact, they did mention somewhere here, where was it, if I can remember? They also mentioned return on invested capital. I love return on invested capital. I think most companies should do it. Unfortunately for this company, 20.3 in the first quarter last year is a really good return on invested capital. 2.7 return on invested capital in this quarter is absolutely terrible. Operating cash flow, 5.7 million. So nothing good. Net debt down though. And they do mention somewhere here. Given the size of these contracts and the number of rigs involved, is anticipated there will be material levels of mobilization ramp up throughout the second quarter of financial year 25, which will temporarily impact earnings growth and working capital requirements in the short term. While utilization and earnings are expected to improve in the second half of the year as newly won contracts reach full production, the company does not expect financial year 25 earnings to be as strong as financial year 24. But again, he does mention, I'm pretty sure this is the CEO, that the balance sheet is looking really good. It's much better position now than it was even 1 year ago, just because of the debt. The other thing I don't like about this announcement is, dear shareholder, I'm pleased to provide the following investor update. You should not be pleased to providing this update to your investors. You should not be pleased. You should be unpleased. You should not be happy at all. Anyway, share price is down 10%, so it's a pretty bad one. But I think there are some good signs in the future that this might be probably the worst quarter the company has experienced, and then improvements. But I think the market is a little bit wary. And even though I think this company is cheap, there's no reason to ever get excited about this company. They just continually disappoint. I'm going to get rid of that. No longer hold this company. Haven't held this company for a while because it looked like the share price was moving to an uptrend and then nothing. The market knew. If you have a look at the weekly chart for Metro Services, if the share price fell to, say, below 28 cents, I might get excited. I might dabble. That seems like a really good support level. Or even below 30 cents, really good support level. But otherwise, even though this company is cheap, they always disappoint when they release updates, seemingly anyway. So that's Mitchell Services coming in at number 3. Coming in at number 2, I'm undecided here. I have Next Science as number 2 and Audinate at 1. I'm going to go Audinate. I've changed my opinion. I'm going to put Audinate as the second top stock of the day because the share price is not down as much as I thought it was going to be. Only down 6.1%. I fully expect the share price to be down 20% today. Fully expected. And this was based off a quarter one update. They had the AGM, and I've mentioned this a few times. AGMs are really important because we get updates from companies. Most companies will release a trading update at their AGM. One of the reasons I do like this time of year is because we see a lot of trading updates, how companies are performing. Anyway, so this was negative, and I think this was more negative than maybe the market is thinking. But there's still some positiveness out there when it comes to Audinate. I'm still a shareholder. I won't sell my shares. And as you can see, who was it? Who said there? Here we go. Materially undervalued by Morningstar. I'm not sure you could actually say that just yet, but the long-term future of this company is really promising. I think this is just a little bit of a road bump on their route, the long-term road, whatever you want to call it. And all companies, every single company in history has gone through one of these speed bumps. And so Audinate is no different. So unaudited gross profit. The other thing I have, why gross profit? Why not profit? Of $10.6 million. Performance reflects several challenges we face at the start of the financial year. And they mentioned in the next paragraph, these headwinds are expected to continue. I read that and I went, yeah, of course. Okay. And Audinate expected to generate a slightly lower gross profit compared to financial year 24. And due to the performance in the first half of the year, it is now unlikely we will achieve that result. So this, in a way, is a profit downgrade. So we had expectations, now we have to lower those expectations. So this is a profit upgrade or downgrade, and that's the most powerful type of announcement. And that's one of the reasons I thought the share price would drop a lot, because this was a downgrade. And I thought a pretty big downgrade at that as well. And that's probably all you really need to know about this announcement. It was a downgrade. And I fully expected, again, the share price to be down 20%. And I think because the share price is only down 6%, I think the market is aware about the bright future of this company. And they're willing to hold on to their shares and just wait. So this could be a good sign moving forward for Audinate, that maybe the worst has already been priced in, particularly because the share price has rallied today. So let's have a look at the chart for Audinate. This is probably one where I probably should have traded it, because I did get a sell signal probably 8 months ago, and I just went, nah, I'm just going to hold these shares forever. And I should have listened to my instincts. Anyway, so the second negative announcement in the last few months, the first one was when they released the results. Share price on that day went below $7. Today, they went to $8. But you can see both of these days there was buying coming in. So on the 6th of August, buying came in. Share price actually rebounded really strongly and kept rebounding the next few days. Now, doesn't mean that's going to happen today, but if we have a look at the 1 minute candlestick, maybe. Yep, the low was reached in the first minute or the second minute. Share price went to $8. I completely missed this one. Share price rebounded really nicely in the first 20 minutes and just gradually grinded up during the rest of the day. That's actually pretty positive. I think the selling happened in the first few minutes, and that's it. Why has my volume just disappeared? Oh, there it goes. So maybe there's no volume in 1 minute charts. That's interesting. I didn't know that. Anyway, so that's Audinate. So I'm going to maintain my position, and I'll add to my position when I see some good positive sentiment coming back in, or the share price moves into an uptrend. Okay, so coming in at number 1, share price of this company has fallen probably a little bit more than I expected from Audinate, but this is Next Science. Share price down 35.9%. I did own this company a few years ago as a trade. I'll show you my thought processes behind that. So they did release their Appendix 4C today. Possibly I should do like a standalone video on this one, but it is the stock of the day. This is another company that I think will eventually get close to an inflection point. I'm just not sure when. And when they do get to that point, I would be attracted to this company. But the question is, why? If or when? If, I'm pretty sure they will, but when is the other question. But straight away, it looks pretty negative. So we have talked about down. We have a lot of downs here. So product sales down 7% on previous corresponding period, down 19% on second quarter financial year 24. So you want to see downs, and it's just downs a lot, lots and lots of downs here. Gross margin of 681%, which was a bit of an increase. Cash receipts of 4.1 million, down 21% on previous corresponding period. Closing cash balance of $1 million. So straight away, because they're burning through cash, that is telling me that more than likely this company will have to do a capital raising in the very near future. In fact, we can see if they will or have talked about that capital raising in their Appendix 4C. Reaffirm financial year 24 guidance to be adjusted EBITDA and cash flow positive in fourth quarter financial year 24, first quarter financial year 25. That I'm not sure. They also, if you have a look at these, now they talk about why they have seen sort of a drop in sales, down 7% on previous corresponding period, as higher direct sales of experience and partner sales were offset by a decline in DME channel due to the slower than expected transition to a predominantly agency sales force. So things not moving in the right direction just yet. And by the way, where is it? Yeah, you just see this is Next Science revenue by product category, surgical and wound care over the last 8 quarters. There's not much growth there. Anyway, let's go to the Appendix 4C. In fact, I always look at the Appendix 4C before I look at commentary. In this video, I've done the complete opposite. So receipts of customers, 4.1 million. I'm going to go to my spreadsheet. And we'll go to Next Science. NXS, not quite in excess. Oh, I'm going to get rid of the highlighted section. Close to in excess, but not quite. NXS. So I've been following this company since the June quarter 2019. And from the June quarter 2019 through to probably 2023, we did see some nice growth in receipts, up from 1.2 million to 3.8 million. But 4.1 million in this quarter is the worst quarter since the March quarter 2023. So we're talking about 6 quarters ago, 7 quarters ago, or 6 or 7 quarters ago. This was the worst quarter. Before this bad quarter, receipts were still rising slowly. So this is a concern, a significant decrease in receipts in 1 quarter. And I think that's one of the reasons why the market has really sold off. Burned through $2.9 million in cash in this quarter, $8.2 million in the year. First, that's 9 months to date. And that also makes me a little bit dubious because they're talking about, so this is the 3rd quarter of financial year 24, is that right? And they do talk about adjusted EBITDA and cash flow positive in the 4th quarter. So we're talking about this quarter. So they really have to turn things around. I'm a little bit dubious about that. But if they can, this will become a little bit more interesting of a company. Maybe this cash receipts, this depression in cash receipts is a one-off. They have to prove that to me in the market right now. The other thing I like to see here is cash. We already know they've got less than $1 million of cash, which means they have to answer Section 8. And do they have debt? Yeah, they have a little bit of debt. No, yes, Section 8. Okay, so if what they do is go through the cash burn in this quarter, if they have less than, 2 quarters of funding left, they have to answer Section 8.6. And apparently they have 1.9 quarters of funding left. That's not right. They burned through $3 million of cash in this quarter. Oh, they included finance facilities. Oh, okay. They still have to answer Section 8.6 because they have 1.9 quarters left of funding instead of 2 quarters. So does the entity expect that it will continue to have the current level of net operating cash flows for the time being? And if not, why not? So you can get a lot of insight just by reading this section. What is the company thinking about the future? Do they expect this cash burn to continue? The company expects the combination of the sales force restructure and the continued focus on revenue quality within the DME channel and cost optimization across the business to deliver improved net cash from operating activities in future quarters. Has the entity taken any steps, or does it propose to take any steps to raise further cash to fund its operations? So going back to what I was saying earlier, there's a possibility the company might have to do capital raising. Here's their answer. We have not taken steps to raise further cash as we do not expect to need further cash to fund our operations beyond the loan facility we have with TIGA referenced above. Okay, so they're going, if they do need cash, they'll just use their finance facility. And then they answer 8.63, which I'm not going to talk about. Okay, so there are some concerning things about Next Science, but is it worthy of a 35.9% drop in share price? Maybe. And the chart looks pretty bad as well. Next Science. And I'll just talk about, unfortunately, no comments in today's video. So this is the daily chart. And this goes back to March 2023. an ugly looking chart, if ever there was one. And not only that, share price down to 12.5 cents is an all-time low for this company, and it's gone through the lows this company saw back in October last year. So it's only about 1 year ago, the share price of this company, more than likely on the 23rd of October, the company released their Appendix 4C. The share price dropped 25% on that day, so this is even worse. And the share price has kept on falling. There was a little bit of time here. I thought, oh, it's getting exciting here back in April. Share price went on a little bit of a run, but nothing came of that. Let's go back in time. So I did trade this for a very brief moment. Wasn't that? It was just here. So I've been following this company because they listed, when they list, I forget, 2018 or 2019. Yeah, 2019. And I was following this company and I thought, oh, it looks like it's found a bottom. And then the share price started to turn up in early 2021, early 2021. And I took a trading position, I think it was April. I think it might have been, early April at about $1.35. Share price went on a good run. There was a really interesting trading day. I still remember this. On the 26th of April, share price rose 14.4%. But it was up about 30% at one point in the day. And then we saw a lot of selling. And that is a negative one-day candlestick when you see a lot of selling. And that was, or did represent, the long-term high for the company. Now, the share price did get close back up there a few weeks later, or maybe a month later, but that was sort of the signal to me that I think the air is coming out of this company. And I didn't sell at that point, but I sold in the middle of June. There was a few really big down days, and I sold at a small profit. And then I'm glad I sold. So I had a trading plan. I said if the share price falls below a certain level, I was going to sell, and it did that. And I probably sold at about $1.50, I think, $1.50, $1.60. And look at that. Ever since then, share price has gone from $1.50 down to 12.5 cents. So this is why it's good to stick to a plan. And even if the share price falls below your sell point, sell, because this is what can happen. Don't fall in love with companies, because I thought the future was bright for Next Science, but they have not yet proved that they can achieve that bright future. But the further the share price falls, the more intrigued I become. Anyway, so that's all I have. Actually, I'm going to answer one question. I have a few minutes. Ben Hutchinson says, hi, Kneppy, was surprised by your remark. Something like 3 gold companies I own, West African, Bellevue, and Auric. I thought you owned Ramelius. Yes, I did own Ramelius. Did you exit? So I did have 3 companies, Ramelius, West African, and Auric. And I decided just to have 2 gold companies, which was a little bit of a mistake. I should have had 3. And I wanted a bigger one and a smaller one, and I wanted 2 companies that I thought were pretty good value. And I thought West African, because of sovereign risk, was better value than Ramelius. Now, that West African hasn't done badly, by the way. I was sort of ruining that decision when the share price dropped a lot. But by the way, when I sold Ramelius, the share price of West African was much lower than it is now. So, in fact, by selling Ramelius, because I decided to just own 2 companies, I've probably done, maybe not. I should have not sold Ramelius. I sold Ramelius at $2, so it hasn't gone up all that much from now, I suppose. Oh, no, $2.10, I think. Anyway, so it hasn't significantly risen from when I bought, but West African has gone up significantly, but nothing compared to Auric. This one does make me nervous. Bought at 17 cents. And it's now 35. It's getting towards a triple bagger for me. Hopefully within the next few months, it will become that. Auric. I do have by the way, I do have a sell point, which I've just lifted. My stop loss is 30 cents. Anyway, so I bought into Bellevue because I thought that was good value. I was actually thinking of, what's RRL? That's Regis. Yeah, Regis. I was actually liking this one. And then share price just took off like a rocket. So it broke out and has just taken off like a rocket. So the reason I say it's broken out, if you put a line, like a resistance zone just there, you can see the share price of Regis just had so much trouble getting above that level, about $2.30. And then once I got above it, it just took off. That's exactly what you want when you see a breakout. I'd like to see the share price just pull back, by the way. Anyway, so I don't own Ramelius anymore, but yeah, Bellevue. I'm going to look at Bellevue. That's done pretty well as me. that has done well with me. The only reason I bought this one was because I thought the market really overreacted to the downside when they did their capital raising. I didn't buy at the bottom, but that's okay. I thought the market overreacted. So thank you, Ben. Yeah, so Ramelius, I think you can't go wrong with most gold companies, apart from maybe Explorers. I did have a few Explorers, and I completely sold those because the money wasn't going to Explorers. Explorers are still struggling, I think. The couple I do follow, like Pack Gold, share price just keeps on dropping. Yep. RXL, which one's, is this Rocks? Yeah, Rocks Resources. Oh, it's actually had a nice little bounce. Oh, nice volume coming in. That's actually nice. And there's another one too, but I forget. But I was following a few and owned a few gold explorers, but they weren't doing anything. It was all the money was being pumped into the producers. So thank you, Ben Hutchinson. And that's all I'm going to talk about in today's video. Just one comment because I've gone over 1 hour. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.